Renewable energy refers to power sourced from natural processes that replenish at a rate faster than they are consumed. Let's explore the various types of renewable energy shaping our sustainable future. Solar energy, wind energy, hydroelectric power biomass energy, and geothermal energy. Unlike fossil fuels, which emits harmful pollutants, renewable energy sources generate minimal to no greenhouse gases during operations. This clean and sustainable nature of renewable energy is pivotal in combating climate change and reducing air pollution. The sustainability of technologies like solar panels, wind turbines, and hydroelectrical facilities facilitate a transition towards an environment-friendly and resilient energy system. As we embrace renewable energy technologies, we contribute to a cleaner and more sustainable future for generations to come. Since its introduction in July 2017, the Goods and Service Tax Law has significantly shaped India's energy landscape, particularly in how it treats electricity sales and transmission. Electricity sales have remained exempted under Notification Number 2 2017 Central Tax Rate dated June 28, 2017. Meanwhile, transmission of electricity is categorized as services and is also exempted under Notification Number 12 2017 Central Tax Rate. From January 2019, Notification 24 2018 Central Tax Rate introduced a 70:30 ratio for supply of goods and services respectively in renewable energy sector, providing a structural framework. GST rates applicable to various aspects of renewable energy. Goods falling under chapter heading 84, 85 and 94 are taxed at 12%. Pure services related to renewable energy carry an 18% GST. The composite supply excluding maintenance services is taxed at 13.8%. Renewable energy certificates are subject to an 18% GST rate. The GST rates have evolved over time, reflecting policy adjustments and sectoral dynamics. As India continues its journey towards sustainable energy solutions, navigating these GST implications is crucial for stakeholders in the renewable energy sector. Input tax credit on supplies of goods and services related to renewable energy can be treated differently based on whether a business operates in the manufacturing industry or service industry, due to the nature of their operations and eligible activities. First up, manufacturers of renewable energy devices. These businesses, like those procuring solar panels or wind turbines, can claim ITC under Section 16 and 17 of CGST Act 2017. Next, dealers and contractors involved in procurement and installation of renewable energy goods and services. They too can claim ITC, subject to certain restrictions outlined in Section 17(5)(c). For end customers such as factories or commercial buildings installing renewable energy units or captive electricity generations, the rules are different. These units can be classified as plant and machinery, not subject to certain building and construction restrictions. However, if these businesses sell surplus electricity generated from renewable source, the GST on these sales is exempt. Therefore, any ITC used for generating this exempt electricity must be reversed. Businesses solely in generation and sale of electricity from renewable sources also have specific rules to follow under GST regulations. In conclusion, while input tax credit is generally available for businesses involved in renewable energy, the specific can vary widely depending on the role and activities with the sector Understanding these rules and ensuring compliance is crucial for managing costs effectively. In a significant ruling by the Authority of Advanced Ruling in Rajasthan, it was determined that solar power plants, when permanently fastened to rooftops with supporting pillars, qualify as plant and machinery. This classification allows business like Pristine Industry Limited to claim input tax credit under GST. Moving on to subcontractors in solar power sector, the Karnataka Advanced Ruling clarified that they too are eligible for concessional GST rates applicable to solar power generation systems. This decision ensures that subcontractors such as Messrs Solaris Non-Conventional Energy Private Limited can benefit from reduced rates provided they supply goods strictly for solar power projects. When it comes to waste to energy plants, classification hinges not just on name but also on technical specifications. This nuanced approach helps in accurately applying GST rules, particularly concerning the generation and sale of electricity from such plants. Lastly, businesses solely involved in generating and selling electricity, including renewable energy, face specific GST implications. As per notification number 2/2017, electricity sales are exempt from GST, necessitating the reversal of ITC claimed on related inputs. These rulings underscore the evolving regulatory landscape for renewable energy in India, influencing how businesses operate and plan for sustainable growth. Navigating the taxation landscape in renewable energy project presents a significant challenge, especially with the prevalent use of engineering, procurement and construction EPC model. Under GST legislation, EPC contracts that involve composite supply leading to immovable property are categorized as work contracts, attracting an 18% GST. This classification directly impacts project cost structure, necessitating careful management of tax liabilities. ITC on inward supplies, particularly for work contract services, faces limitations due to clauses on block credit. This adds complexity to financial planning, especially when sustainable capital expenditure are incurred in project research and development. For entities without a fixed place of business in a specific territory, territorial-based taxation law can further escalate project costs. These factors cumulatively contribute to increased expenses, impacting the final product pricing. Addressing these challenges, there is a growing call for Indian government to formulate a tax mechanism ensuring seamless taxation across the supply chain. Such a mechanism would optimize tax efficiency from input to final product, ultimately benefiting end consumers. As renewable energy sector continues to expand, navigating these taxation complexities becomes crucial for sustainable project development and economic viability. As we conclude our journey through renewable energy in India, it's evident that this sector is not just an alternative but a cornerstone for the nation's energy strategy. India's ambitious goal of achieving 450 gigawatts of renewable energy capacity by 2030 reflects its strong commitment to sustainable development and environmental stewardship. The government's proactive measures such as the National Solar Mission and physical incentives are commendable strides towards establishing a robust renewable energy infrastructure. This transition is reshaping India's economic and environmental landscapes, embracing technologies like solar panels and wind turbines, enhance energy security and reduce dependency on imported fossil fuel. The evolving GST framework, particularly in relation to renewable energy, play a pivotal role in influencing pricing, strategies, and investment decisions, underscoring the sector's critical importance. India encounters both challenges and opportunities in renewable energy, necessitating continuous innovation, supportive policies, and active societal engagement. By steadfastly advancing renewable energy, India not only contributes to global climate efforts but also secures a greener, more sustainable future for generations to come.